Welcome to Marketplace. Tonight, we investigate life insurance. Many Canadians pay too much for coverage and are left dangerously underinsured.
On Market Watch, a warning about Florida grapefruit and good news for allergy sufferers.
Also, the story of two families who found a unique way to save money on hotel bills when they travel. It's called home exchange.
But first, our report on life insurance. Canadians are among the most insured people in the world. In fact, our per capita purchase of life insurance is exceeded only by the Japanese and Americans. But many of us are often sold policies that can leave us with serious financial problems when tragedy strikes. At 24, Donna Brando is a single mother. Her daughter Kelly is just 2 years old. Donna never thought she'd have to raise Kelly without her father. But last year, Ron Brando died, suddenly, in a car accident.
We never thought he'd die. That thought never crosses your mind. It never does.
Donna Brando was left with a lot of responsibility, but very little money. Her husband had only $40,000 in life insurance. When Donna Brando realized how little she'd been left, she started to worry about protecting her daughter.
I was vulnerable because I was left with our daughter, and everyone was telling me, my family and friends, that if something were to happen to me, I had nothing for Kelly.
So Donna bought life insurance. She bought a policy on herself for $50,000. For that, she paid yearly premiums of over $450 out of an income of only $12,000. Donna Brando ended up paying 4 times what she had to for that amount of life insurance. She paid that much more because she fell into the common trap of buying what's called whole life coverage.
Life insurance was never my favorite subject. The idea of putting money into something that didn't pay off until I died never appealed to me.
Commercials pushing life insurance often emphasize saving for retirement.
It gives us all the life insurance protection we need, and it'll help me retire as early as age 55.
But saving for retirement isn't part of all life insurance. Term insurance is pure life insurance with no savings component. The prices go up as you get older, but at younger ages, it's the cheapest insurance you can buy. That's why consumer groups recommend term insurance. The other main type of insurance is called whole life. It has a savings component in addition to the insurance, although the savings plan is a poor one. The level of premiums is usually guaranteed not to increase over the years, but the premiums start off at a high level. That's why whole life insurance is typically much more expensive than term coverage. Marilyn Baker was also left alone to raise 2 children. Her husband Rick died in an accident last year. He left her $60,000 in life insurance proceeds, but he had been making $30,000 a year. Financial experts advise he should have been insured for about 10 times his annual income. Marilyn says the $60,000 is just not enough to raise 2 children, and she's had to give up her apartment and move her family into her parents' home.
It's not really a lot of money. You know, I might think $60,000, but really when you sit down and I have to look at it, I have another 10 years at least to raise these children on my own now, with no income coming in.
Rick Baker was paying yearly premiums of over $500 for $60,000 of life insurance. But most of those premiums went for whole life coverage. If he'd bought all term insurance for the same premiums, Marilyn Baker would have been left with $250,000, 4 times as much as she has now.
I think it's very typical and it's very sad.
Bill McLeod teaches finance at Cambrian College in Sudbury. He's a critic of the insurance industry and author of The Canadian Buyer's Guide to Life Insurance. He says Marilyn Baker is a victim of her own insurance company.
Certainly, she and her husband got taken. They could have bought 4 or 5 times as much term insurance for the same annual premium, and she would have been a lot better off today had they done that.
Bill McLeod says the insurance industry makes bigger profits selling the much more expensive whole life policies. The premiums are so expensive that people who buy whole life can usually only afford small policies, and their families are then left with too little insurance to live on.
Most people who have whole life are badly underinsured, and the average death claims every year show that.
Why?
Well, they just can't afford enough protection. There are 2 companies, as we talk, that are paying average death claims of less than $3,000. Can you imagine taking a check for $3,000 to a widow with a couple of kids?
Marilyn and Rick Baker bought their life insurance from London Life. London Life is one of the wealthiest of Canadian life insurance companies. They've sold life insurance to over 1 million Canadians. Bernie Smith is vice president of their district sales division. Rick Baker could have bought almost $250,000 in term life insurance for the same premium
Yes.
that he was paying for whole life. I mean, that's 4 times what he had, and that would have protected Marilyn Baker and the family.
Yes.
Wouldn't that have been a smarter thing for Rick Baker to have done?
Knowing what we know now, you're right.
Marilyn Baker, she's strapped, financially strapped. $60,000 is not going to help her for long. Is London Life responsible for that?
I guess my comment to that would be she has the $60,000 because an agent of London Life went to call on Mr. Baker and in fact did sell a program which in your eyes isn't adequate, but it's better than nothing.
But Bill McLeod thinks there's no excuse for selling Rick Baker more expensive whole life coverage, knowing it would leave the family with inadequate funds. He says the industry sells to uninformed consumers.
They can't defend themselves. They're unable to sort through the sales presentations, analyze the numbers, and say, hey, you know, this is a bad deal for me. I don't want to buy this. And the companies and their sales forces target these people because they're an easy mark.
Did you trust the agent?
Yeah, you always trust the agent. Why? You know, you figure they know the best for you. And when they sold my husband his policy, they knew the situation, that he was the sole breadwinner. You know, why did they sell him that type of policy? You know, he did trust them. I trusted them.
They really pressure you because you don't know anything, and they really stress the fact that you don't know anything and they do, and they know what they're talking about, and you can't get a better deal or you can't get anything better unless you get this right now.
Donna Brando bought whole life policies from a Metropolitan Life agent. Although the company disputes it, Donna says the agent never properly explained the differences between whole life and term insurance.
You know, I trusted this guy to sell me something that I could afford and that would benefit me and that would still take care of everything and not make me go broke.
You'd expect a life insurance agent to defend the industry, but Bob Barney is one life insurance agent who's very critical of his colleagues' selling techniques and their emphasis on whole life insurance. He specializes in selling term insurance. Do you think agents explain the difference to the client, the difference between term and whole life?
No, generally I don't. I don't think term insurance is explained as an alternative at all. I think if the subject comes up, everything is done by the typical agent to drive down any sense that term insurance is a viable product, and the ideal whole life is raised up as it's the right one.
But why are agents so anxious to sell whole life policies instead of term? Well, Bob Barney says it's because agents can make up to 50% more on initial commissions by selling whole life.
It does. I mean, I'm sick and tired of being considered a snake oil salesman. Life insurance agents are generally considered right there at the bottom of the barrel as far as, people who conduct a profession in the public eye, and unfortunately these selling practices really reflect negatively on it.
One of the sales pitches Donna Brando was given was that her whole life policy would help her save money and give her a retirement fund when she was older. But traditionally, life insurance has paid very low rates of return on these savings portions. We asked industry experts to do some calculations on a variety of whole life insurance policies to show what return they're paying on the savings. The rate of return varied widely between policies. Our experts found some policies paying up to 8.5%, but many paid as little as 3% or less. But even those rates are usually only achieved after decades of paying premiums. In the early years of the policies, the rate of return is actually 0%, and those low rates of return are seldom revealed to customers. Do agents really sell whole life policies by pointing to the big pile of money at the end of the rainbow? It accumulates over the years, even though the rate of return is low.
Yes, that's exactly what they point on. What they're doing is they're preying upon the fact that the consumer does not appreciate the impact of interest on money over a long period of time.
Do agents reveal the rate of return?
Well, That's always a trick question. I mean, the fact of the matter is rates of return are not stated within traditional whole life policies. They're not laid out.
Why?
Why? Because I don't think people would buy them if they knew what they were.
The agents that are out there are pointing to the money at the end of the rainbow. I mean, are they telling people the rate of return?
There is no mention mostly of interest rates. I don't think it ever comes up. If they're asked, I'm sure they would, yeah.
Why doesn't the agent tell me? Why does he have to wait till I ask the question?
The actual dollars are shown.
The money's shown,
Yes. Yeah.
but the rate of return.
The rate of return, I can't say
Percentage.
that every representative tells exactly what the rate of return is.
Insurance companies point out that one of the benefits of a whole life policy is a savings portion that you can borrow against at favorable interest rates. You can also cash in the policy altogether. What most consumers don't realize is that if you cash in all your savings, the policy is canceled and you lose your insurance. And if you die before taking out your savings, the insurance company keeps the savings portion. Did your agent explain to you that if you took out your savings, your life insurance policy would be canceled?
No. He said I could take it out because that's money that I'm putting away, and it's still to keep going.
Policy would continue.
Yeah,
That's not true.
but that's how I understood it.
Effectively, the agent will say, no, here's your death benefit, and here's your cash values. Now, the key word here is and like you've got both. Well, you have the option of either, but you don't have both.
You're damned if you do and you're damned if you don't, and that's a very nice position for the companies to have you in. They got to be a $100 billion industry by selling overpriced products and by helping themselves to people's savings when they die.
The consumer would say, yeah, but that's my money. I want my savings part of the policy.
It's only your money if you take it out of the policy as a loan, if you will, which is a loan from the company, or if you take it out before you die. If you die, that is part and parcel of the death benefit.
Do you think that this is an industry that preys on unsophisticated people?
I think the industry in general and the majority of representatives are, in fact, truly interested in looking after their clients in the best possible way and trying to do what is best for them. I really do believe that. I couldn't possibly have stayed in this business for 32 years unless I believed it.
If you just can't manage to save money and need a forced savings plan, then maybe whole life insurance is for you. But for most of us, the best advice is to buy term insurance and insure only the income